That's a 379% increase in the price of this stock. All right, welcome to Talkin' Investing. I am Tom, and as always, this is not financial advice. In this video, I would like to talk to you guys about a company named AYRO Inc., stock ticker AYRO. This is an EV company, so what I hope to do in this video is take a look at what their product is, go through some of the fundamentals and the technicals, and then we'll go through the chart and I will show you guys what happened to this stock this year and what potential price points I think are out there in the future. Just a little bit about myself. I have a background in accounting. I was a CPA. I've been working with numbers for over 30 years. I have a couple of decades experience in trading retail stocks, and I'm just hoping to share some of those experiences with you guys and we can make some money along the way. Our channel did just start a 10K challenge. I'm going to put a link below to that video if you guys want to see what that's about. And I will also put a link to our Discord below, which is free. So I strongly encourage everybody to join the Discord. There are upgraded levels if you choose to upgrade. We're coming up on 300 members in the Discord. And in the general section, which is free, we have an excellent continuous conversation going. I encourage and welcome you guys to join the Discord for free. Okay, getting into AYRO. So the trading day just ended right now. So AYRO closed at $1.73. It was up 12 cents, which actually is 7.5% on the day. So AYRO had a very big up day. This is one of the many EV and small cap high growth stocks that got absolutely beaten down in 2021 and is potentially in a position to have some good upside. So AYRO's 52-week low is $1.49, which it hit last week. So it is actually up like 12 to 15% over the last 1 week of trading, but that is off of its 52-week low. At this point, that gives them a market cap of $63.78 million. So this is a very, very small company. And I will tell you guys, in the world of EV, there seems to be the haves and the have-nots. There's companies that have never made a car before that are worth $100 billion. And then there's companies like AYRO that are worth $63 million. So I'm not sure up until now who's been picking the winners and the losers, but ultimately that will be decided by who successfully produces, sells cars, and makes money. So again, they have a $63.78 million market cap. That's a significant number. I want to compare that to something. If we look at this company's cash at the end of the third quarter, they had $77 million in cash against only $1 million in debt. So even if you want to take it net, that's $76 million of net cash minus all debt, that's short-term and long-term. They have a current ratio of over 14 to 1, which is astronomical. And based on their cash burn rate, they have at least 3 years of cash left, if not 4. It's very unusual for a company's market cap to be less than the actual cash that they have in the bank, minus the entire amount of debt that the company has. That means they're basically valuing the rest of the entire company, other than its cash, at a negative number. They're giving it no value whatsoever. In fact, worse than no value, they're saying it's a negative. So that's an extremely harsh position. I'm not going to say that every single time you run into this situation, it's an automatic buy, because there are certain circumstances where companies in the big picture have so many other negative things going against them, they would be potentially unable to overcome the fact that their market cap is now below their cash value. This company, in my opinion, does not fit into that category. So let's go take a look at what they do. Okay, so this company produces a car called the Club Car Current. You'll see the Current is available with a flatbed, as a pickup, or as a fully enclosed van box. So they can customize these for their customers to any of those 3 configurations. It really does come down to this Club Car right here. And this is not the first version of the Club Car. This is the latest and greatest, which is called the Club Car Current. So this is AYRO's third quarter financial results, which came out November 15th. There's a couple crucial items that they mention in here that I want to go through. So the first thing is revenue of $559,000 for the third quarter. That's up 44% year over year, but that is a very, very small number. This is not their success range. Recent corporate highlights. Launched the 2022 AYRO Club Car Current. You can see there have been multiple iterations of this And as has been the case with so many of these EV companies, they have had to continue to make modifications to their product to get it to meet the specifications that the consumer is looking for. Announced a total of $4.9 million in purchase orders for the Current from Club Car received in the second and third quarters in conjunction with the Current's launch. So they then go on to say contracted backlog of $4.1 million as of September 30th, 2021. So you can see these are some signs of life and some signs that they're starting to move in the right direction. And again, you want this to happen sooner than later. It looks like they've made great progress in the second quarter and the third quarter. Now with these purchase orders, we're still waiting to see how they've done in the fourth quarter. Obviously, today is only January 3rd, so it'll be a little while before we find out how they did in the fourth quarter of 2021. What I am looking at is the fourth quarter of 21 and the first couple of quarters of 2022. If they can start to hit the sales numbers that they're talking about, then the amount of cash they have is going to get them to the finish line, in my opinion, and get them to a point where they are cash flow positive and profitable. Last number I want to look at here is the number of shares that this company has. They have 36 million shares outstanding, and the float is about 30 million shares. That's a very low number of outstanding shares versus most companies. So this is very helpful for them. Essentially, with 36 million shares outstanding, if they can have net income of $36 million, they're making $1 per share. Even at a 20 PE ratio, this would become a $20 stock. Again, that is not going to happen in 2022, and it's not going to happen in 2023. But that's a pretty realistic 4-year goal for this company, in my opinion. So you can see they're trading at $1.73. And to me, it looks like they have significant upside, maybe even all the way up to $20. Again, that would be a very long-term price target. For me, this is the ultimate buy and hold. But what we do need to see is that they continue to improve on this Club Car Current. You know, they got almost $5 million in orders. If they can add to those and start to get some consistent sales, then I do believe this company will be a long-term buy and hold. So I'm going to start a little bit zoomed in. You'll see right here on December 28th, so just a few trading days ago, this stock hit its 52-week low. This doesn't look like much, but if I stretch that out, you'll see that's actually about a 13% increase, about 7.5% of which came today. If this stock were to get back to where it was trading just 2 months ago, and really not much has changed on the story of this stock in the last 2 months, this represents almost a double in the price of the stock. So somewhere around a 98 or 99% increase just to get back to where it was trading on November 4th, which again was just 2 months ago. So for me, I see this as a very realistic 6-month price target. 6 months from now, we will have gotten 2 more quarters of financial statements, and we will see what the success rate is on their sales and purchase orders. And obviously, every time they get a big purchase order, they will most likely do a press release and let us know. So we're going to get an awful lot of information over the next 6 months. And in my mind, as long as it's not bad, I see this reverting back to where it was just 2 months ago, because again, I think most of the rest of this downward pressure is just tax loss harvesting and this stock being in a position where it's massively oversold. You know, it's now oversold to the point where its market cap is less than its cash on hand. So you can see this is a truly beaten down stock. I'm going to zoom out a little bit and show you guys a little bit more clearly just how beaten down this stock is. This is basically the last year of trading on this stock. And this is on the 1-day chart, so each one of these candles represents 1 day. So if we go all the way back in time, you'll see that this company hit its all-time high on February 10th, and that was $11.50. Now it's trading at $1.73 right now. So that's nearly a 90% reduction in its stock price from February to the end of the year. So when I say this stock is beaten down, this is one of the most beaten down stocks that you can find. It is absolutely positively at this point priced to fail. Do you think this company is going to succeed? What are the chances that you think it's going to succeed? And does that flip the risk reward? You know, they're already 90% down. So, and they've got several years of cash left. So how much more downside is there? I don't know. I don't have a crystal ball. But to me, this feels an awful lot like the bottom. And if they can continue along the lines of these $4.9 million in purchase orders they got, that could head back up over time. So let's just take a look at a few more numbers. If this stock were able to go from where it's trading today back to where it was trading on June 9th, that is a 245% increase in the price of this stock. And where it was trading on June 9th was a local top, but it was nowhere near their 52-week high. So again, this is not a pie-in-the-sky number. At around $6, this stock was considered oversold at that point. So just to get back to there would be a 245% increase. To get back to where it was on March 23rd, which was above $8, and that was after, there was somewhere in February and March, a lot of these small cap high growth stocks had a period of over exuberance, and they ran up to a point that was maybe getting way ahead of themselves. So I'm eliminating that and going down to this point here more near the end of March. To get from where we're trading today back to that, that's a 379% increase in the price of this stock. So that is by no means my short-term price target, but if this company can get back on track, I would think they're somewhere between 1 and 2 years away from getting back to these $6 to $8 price range. So again, this is not financial advice. I don't know what's going to happen with this stock. Down 90%, given the amount of cash they have on hand and given the recent purchase orders that they received, I think this company's story is in a spot where they are way oversold, and I'm expecting a rebound. So those are my thoughts on AYRO. Thanks so much for joining me, and I will see you in the next video.